7:45 now. For the first time, the UAW strikes all three major U.S. automakers at the same time as the unions try to flex their muscle in a way we have not seen in decades. Some thoughts on that from Ernie Burns with Burns Wealth Management. Good morning to you.
Morning.
You know, this on the one hand, I guess, is the union. We saw this with UPS and what the union managed to get there in terms of concessions. We keep hearing about workers have, more power right now than they've had.
Yeah, the CEO of GM came out this morning on CNBC Squawk Box and basically talked about this very detailed. They're very disappointed. She's very upset about it because they've offered something they've never offered in over 100 years, a 20% increase in wages, compounding over 21% a year, and it was declined by the union.
And cost of living adjustments, they're not going to go back to pensions, which is one of the union demands, or at least we assume they are not. So on the one hand, it's workers in the general economy. I mean, it's not just auto workers who are saying, hey, I have some rights here after, from the union's point of view, decades of concessions, versus on the other side of the equation, management saying your costs are going to go up. Everything's going to cost more.
And we don't see prices really dropping a whole lot either at the pump or anywhere else, right? So therefore, this happening, and the union is basically trying to take this time right now as wages going up around the country with inflation and everything, that the auto workers can get a raise also. But they've initially asked for a 20% increase, and they're getting it from the major auto workers, but they're not accepting it yet.
40% was what the demand was. They're in the 20% range now.
Yes.
So we'll see. At the moment, it's a targeted strike at three big plants that make parts for some very popular models of the three big makers. They haven't struck everybody.
Right.
So what do you think's going on there? Just a little strategy and a little phase in here?
Yeah, first of all, they've asked for 40 because they knew they weren't going to get a 40% increase in wages. But all that occurring and what they're asking for human rights and all this other stuff was going on, they're looking at possible nice increases, nice areas to work in, cleaner areas to work in, but they're not very happy right now.
All right, we jumped a little ahead on the next topic I want to hit, which is the soft landing. On the one hand, the Fed has been battling inflation. People have been hoping that this is somehow a soft landing, meaning we tame inflation, but we don't go into a recession. Your thoughts?
Yeah, so one reason we had a 300-point rally yesterday is because we're in a soft recession right now. The market's pretty much bet on it. We're not going to have a major recession. So all those doom and gloomers are wrong. Also, Federal Reserve looks like they're not rate increasing next week, so therefore we can have a pause. That's another positive. And the pre-market indicators with the CPI index look like they're very settled also.
Inflation.
So, inflation. So therefore, it's three big areas why we've seen a little bit of a rally in the market right now.
Okay, Ernie Burns, thanks as always.
All right, thank you.
All right, the time now 7.